All right, let's dig into a really strange paradox that's playing out across America's heartland. We're seeing a harvest so huge, so abundant, that it's actually threatening to break the very farmers who grew it. So how does that happen? Let's get into it.
So, picture this. It's late summer 2025. You drive through the U.S. Corn Belt, and everything looks perfect. The corn is high, the soybean pods are full, all the forecasts are pointing to one of the biggest hauls in years. I mean, on paper, this is the absolute picture of success.
But then you look away from the fields and you glance at the trading screens, and the story could not be more different. It's just a sea of red. Prices for corn, for soybeans, they're all falling. That very abundance, that should be a huge blessing, is somehow becoming a curse.
So what on earth went wrong? That's the big question we're going to unpack here. How is it possible that a year with near-perfect growing conditions and massive production can lead to so much financial stress and uncertainty? The answer, it turns out, tells you a whole lot about the delicate, fragile balance of our entire global food system.
Okay, first, let's just look at the supply side of the equation. This is kind of a classic economic story, but one with a really painful twist for farmers.
The sheer size of this harvest is just staggering. We're talking private estimates projecting over 16 billion bushels of U.S. corn. That is a monumental, and I mean monumental, wave of grain that's about to crash onto the market.
And what's wild is that this is all happening despite some hiccups along the way. Yeah, there was some flash drought, a little disease pressure over in the eastern corn belt, but those were just localized issues. When you look at the national picture, crop ratings are the best they've been in almost a decade. And that means one thing: farm bins are about to be overflowing.
And here's the direct result. On September 3rd, the futures contract for that corn, the corn that's about to be harvested, it dropped 5 cents. The market is just reacting to a simple brute force fact. There is a tidal wave of corn coming, and it's dragging prices down with it.
So you've got this overwhelming supply. That's one half of the problem. But what about the other half, the demand side? Well, this is where the crisis really goes into overdrive. Because it turns out one of America's biggest, most reliable customers is simply gone.
I saw this quote from a market analyst that just hits the nail on the head. It perfectly captures the mood, especially for soybean farmers up in the northern states who depend on those exports. It's not that they can't grow the stuff. It's that right now, the global market is basically screaming, "We don't want it."
And just to put this into perspective for you, normally this time of year is the absolute peak season for selling U.S. soybeans to China. But this year, for the new marketing year that's about to start, we've seen zero, literally zero sales on the books. It's a total and complete standstill, and it's pretty much all because of ongoing trade tensions.
And China, they're not just sitting around waiting. They are actively finding other ways to get what they need. Brazil is stepping in to fill the short-term gap. China is tapping into its own strategic reserves. And honestly, we're seeing this bigger geopolitical shift, this new East alignment, that's just pushing American farmers further out of the picture.
Now, you might be thinking, okay, so this is a soybean problem. But it's not happening in a vacuum. It's like the first domino in a long line. It's setting off a chain reaction that is now spilling over and creating brand new problems for completely different crops.
Here's how the soybean crisis infects the corn market. It's pretty brutal. See, with no one buying their beans, farmers' storage bins are still full from last year. So to make space for the new crop, and just to get some cash flowing, they have no choice but to sell their corn right away. And that floods the market with corn, pushing those prices down even further.
And this isn't just numbers on a chart. The financial pain is very real. Up in the Dakotas, where farmers really rely on those exports to Asia, the local cash price for soybeans has just plummeted. We're talking the low $8 range, a level that one analyst just flat out described as horrendous.
Okay, so the grain markets are in a total tailspin. But, and this is a big but, there's another part of the ag world that has been living in a totally different reality. I'm talking about the cattle market.
I mean, just look at the contrast here. It is night and day. While grain prices are falling through the floor, retail beef prices are going to the moon. In August alone, beef prices made half of their entire upward move for the whole year. It's just a classic case of a super tight supply causing a massive price rally.
And this brings us to this key economic idea called demand destruction. What does that actually mean? Well, with cattle supplies being so tight, the market really only has one tool left to balance things out. Raise prices so high that you and I eventually walk into the grocery store, look at the price, and say, nope, that's enough, and we buy chicken or pork instead. The market is actively trying to ration a scarce product.
But no party lasts forever. We're starting to see signs that this big cattle rally is losing some steam. Futures prices recently pulled back a bit, and that could be an early warning that we're finally hitting that demand destruction point, that the peak might be close.
All right, let's zoom out for a second, because the pressure on U.S. farmers isn't just about one trade dispute or how much they've grown. There are a bunch of other global factors that are all adding to this negative feeling.
It really feels like a perfect storm of global pressure. You've got a huge Russian wheat crop that's weighing on all grain prices. You've got talk of more oil production from OPEC+, and that's pushing energy prices down. And then weakness in other vegetable oils like palm and canola is also dragging soybean values down with them. It's just coming from all sides.
And right at the center of all these massive global forces are the farmers themselves. This quote, I think, just says it all. Their general sentiment, their outlook has dropped for 3 straight months. Why? Because they're facing a crisis that wasn't born from their failure, but from their success. A huge harvest that's colliding with forces way, way beyond their control.
And so that leaves us right back where we started, with a paradox. A year of incredible bounty has turned into a harvest of anxiety. And it forces us to ask a really critical question. What does it say about our food system when a record crop can actually threaten the very people who grew it? And what does that kind of instability mean for the rest of us?